Let's now solve question number 4 from our May 2024 examination. This is a question on amalgamation. Look at the question. Intelligent Limited and Diligent Limited are carrying their business independently for the last 2 years. Following financial information in respect of both the companies as at 31st of March 2024 has been given to you. Don't waste time reading this entire balance sheet. Come to the end. Come to the end of the question. What do they want you to compute the amount of shares and debentures to be issued in to intelligent and diligent. So, as a matter of PC, how many shares are you giving? Are you giving any debentures in PC? If you are giving how many debentures? And to debenture holders, if you are giving debentures, that won't come here because that will be given after amalgamation. So, basically, how many shares are we issuing? How many debentures are we issuing is to be computed. Then the second part of the question is about preparation of balance sheet of Genius Limited. Maybe Genius is the company which is taking over Intelligent and Diligent, showing position immediately after amalgamation. Let's go start reading the first part of the data after the balance sheet. Don't read the balance sheet. Immediately after balance sheet. On 1st of April 2024, both the companies agreed to amalgamate and form a new company called Genius Limited. Genius Limited is transferee. Transferor is intelligent and diligent. With an authorized capital of 40 lakh divided into 30,000 equity shares of rupees 100 each, 10,000 8% preference shares of rupees 100 each. This is of no impact to the entire answer. Only thing that we should do with regard to this is this has to be disclosed in our balance sheet that we prepare after amalgamation in two accounts. Come to the later part of the answer. The amalgamation has to be carried out on the basis of following agreement. Here they are giving little information about the revalued figure of assets and liabilities. This revalued figure of assets and liabilities is net assets taken over. This will be the values at which the assets will be recorded in the new balance sheet. Land and building will not appear in the value in the balance sheet or say old balance sheet. It will appear at the new value given 11 lakh and 8 lakh 50. All of this will be considered in the computation of net assets taken over. Shall we do net assets taken over? Very good. Let's begin with land and building. Land and building 11 lakh, 8 lakh 50. I will write one column for intelligent, one column for diligent. Assets. To start with land and building. Land and building of intelligent 11 lakh, land and building of diligent 8 lakh 50. Together it is 19 lakh 50. 19 lakh 50 is what will go to the amalgamated balance. And the moment I rate land and building, then I'll go to plant and machinery 9 lakh and 4 lakh. Let me write plant and machinery's revalued figure is 9 lakh, Diligent Limited 4, together 13. Then I have inventories is taken at 6 and 3. Let me write inventories to be 6 and 3, together 9. This is the values at which it will go to amalgamated balance sheet. Now, these three items have already been considered. Before I go to adjustment 2, come to the balance sheet. Here, remember that these three items, land and building, plant and machinery, inventory, have already been posted at a differential value. So when you're counting it later, don't count them again. So these three are already taken in NATO computation. What do I have in the next part of this? First adjustment is Katham. Second adjustment. Trade payables of Intelligent Limited includes 1 lakh due to Diligent and trade receivables of Diligent Limited shows 1 lakh receivable from Intelligent. So, mutual indebtedness. When I prepare notes to accounts in the amalgamated company's balance sheet, from trade receivables I'll deduct 1 lakh, from trade payables I'll deduct 1. From whose trade receivables will I deduct 1 lakh? Intelligent Limited. So let me make a marking here. Come to trade receivables. Trade receivables of Intelligent. First column is Intelligent. Here I would have to deduct 1 lakh. And the same has to be deducted from trade payables of Diligent. 1 lakh. So from this 4 I'll deduct 1. From this 6 I'll deduct 1. When? The preparation of balance sheet. So right now I'm still doing NATO PC. After I do NATO PC, hey, in NATO I'll take trade receivables as 6 plus 3 9. In NATO I'll take 12 plus 4 16. Why? Net assets taken over is before amalgamation. That time both are assets. After we compute NATO, after they give PC, after they take our assets, they keep it in their balance sheet. Then they feel like, hey, these two items are same. Then they'll eliminate. Till then they are there. So in NATO, we don't do mutual indebtedness adjustment. In NATO, we don't do unrealized profit adjustment. NATO, we don't worry about statutory reserve, realization expense, nothing. All of these TRUMS adjustments will come in the books of transferee. That too after amalgamation. Immediately after amalgamation, we'll do all of those adjustments. Got it? Then, what is the next item that we have in adjustments? Purchase consideration is to be discharged. Oh, they have given data of PC. Discharge of PC is given. So under NATO, whatever we find, that and PC difference will become goodwill or capital reserve. Very easy question. 14 marks. Lottery. Purchase consideration is to be discharged in the following manner. How are we discharging? Issue 22,000 equity shares of rupees 100 each, fully paid up in the proportion of sum of their profitability in the preceding 2 financial years. So they're giving 22,000 equity shares. For whom? For both the companies, intelligent and diligent together. How much will be given to intelligent in that? How much will be given to diligent in that? That will be based on the profitability of previous 2 years. Write their previous 2 years profits. Find the ratio. In that ratio, share 22,000. Looks like very hi-fi English, but it is very simple. Let me repeat. For intelligent and diligent together, they are giving 22,000 equity shares of rupees 100 each. How much to intelligent, how much to diligent depends upon their profits. Take previous 2 years profits of intelligent and diligent, take the total. We get the ratio, in that ratio we will split. Shall we do this in our discharge of PC? This table is for NATO, which we will complete later. Now, in my PC table, let me write. How many equity shares are given? 22,000 equity shares of rupees 100 each. Can I say that comes to 22 lakh rupees? How much given to intelligent and how much given to diligent depends upon their previous year's profits. When they give previous year's profits, I'll write it in the inner column here, and in that ratio I'll share. Got it? After that, preference shareholders of both the companies are issued equivalent number of 10% preference shares of 100 each of Genius Limited at a price of 125. So if they had one share in Intelligent, they'll get one share in Genius. If they had one preference share in Diligent, they'll get one share in Genius. So same number. How much was there here? Same number of shares. How much was there here? They've told 3 lakh and 2 lakh rupees, and shares were of 100. 3 lakh by 100, 3,000. 2 lakh by 100, 2,000. So they're going to receive same number of shares. Let me show how this works. So preference shares, no, preference shares, the part. Preference shares. So how are we going to give them? Now help me with this. What is their old preference share capital? 3 lakh, right? So 3 lakh divided by 100. We are going to give them 3,000 shares of rupees 125 each. 3 lakh 75. 10% preference shares in Genius Limited. And Diligent Limited. How many shares were there? How much was there? 2 lakh rupees. Shares are of rupees 100. No. 2,000 shares were there. 2,000 shares into 125 each. 2 lakh. Together, if you add, you will get 6 lakh 25,000. That is 3,000 plus 2,000. 5,000 preference shares. How many preference shares are given? 5,000 preference. This is the easiest part. Preference share part. I hope everyone understood. After this, what is the next thing given? 12% debentures of 100 each in Genius Limited at par to provide an income equivalent to 10% on return on the basis of net assets in respective business after revaluation of assets. The company is giving debentures so that they get 10% on net assets. What do we do? Here we do this net assets, no? NATO. Whatever you get for Intelligent Limited's NATO, on that 10% they should get as dividend, they should get as interest in the later years. How will they get? By way of debentures. So debentures can be computed only after I finish NATO. So I will keep this pending. But how much are the debentures given? To the extent of 10%, so that they'll get 10% return on net assets taken over. By these debentures, they should get 10% return on the net assets taken over. You understand? I'll make you read this adjustment once again and then make you do it. Third adjustment done. We finished reading the entire question. Only thing that we have not considered is debentures. Rest everything that's there in the question, we've already adjusted for it. Mutual indebtedness, I've made a marking. I'll do it when I do balance sheet. I hope you understood. The question in the question paper will always look lengthy because the size of the question paper is smaller than your normal paper. If this question paper fits into your paper, it doesn't come to more than 1.5 page. But here the question paper comes to 2 full pages. It doesn't even come to 1.5 page. It comes to 1 page plus few lines in for second page. The moment it comes to 2 pages, people freak out because it is big. It will be very small because see the length of the width is also very small. In your book, it's much more wider. So don't get scared looking at the length of the question. Okay, we are done. Now come to the balance sheet. We should compute NATO, no? To take all the assets. We have taken land and building, plant and machinery, inventory. Rest of the assets. Asset starts from here only. Shall I take trade receivables and then cash? Very good. I'll write trade receivables 6 lakh there. Should I eliminate mutual indebtedness? No, no, no. That is after amalgamation. Now we'll take 6 plus 3, 9. Cash will take 4 lakh plus 1 lakh. Shall I? Trade receivables 6 lakh plus 3 lakh. Cash and bank 4 lakh plus 1 lakh. This will appear in my NATO. I'll write trade receivables 6 lakh plus 3 lakh 9 lakh. Cash 4 lakh plus 1 lakh 5. Shall I go to liability side now? Come on, let's go to liabilities. Liabilities side. What is the liabilities that we have? Profit. A profit won't come in that. This profit will be, however, considered in what? Proportion of sharing. You understand that? Right, people have become smart. Opening balance and profit of current year. Opening balance is last year profit. Current year profit is current year profit. 450 plus 250, 7. 250 plus 150, 4. 7 is to 4 is the ratio for splitting those 22,000 equity. Come back here. Here, 22,000 equity shares has to be split, alva. I'm going to do it this way. To be shared in the ratio of profitability. I'm going to show it in a different color. Shared in the ratio of profitability. Previous year profit 450 and 250. Current year profit 250 and 150. Observe 450, 250, 250, 150. I wrote that. Take the total 7 lakh and 4 lakh. Can I say the ratio is, what do you say, 7 is to 4? Total is 13. 7 by, sorry, total is 11. 7 by 11, 4 by 11. Here this will be split in the ratio 7 by 11, 4 by 11. 22 lakh into 7 by 11, 22 lakh into 4 by 11, 14 lakh and 8 lakh. Did you understand this? Very good. Can I go back to the question? Can I go to the items above our profit? Do you understand this? There's still one item missing here. Debentures are to be given. That we will get to know only when we get to know the NATO. On the NATO, 10% return they should get. Such way we should give debentures. Still it sounds like Greek and Latin, but don't worry, it's easy. I'll teach how to do. Come back to the question here. What do we have? Profit and loss is khatam. Then retirement, long-term benefit. This is liability. This is liability. 3 lakh and 2 lakh. Trade payables, 12 lakh and 4 lakh. This is liability. Shall I write retirement gratuity fund 5 and trade payable 16? Retirement gratuity fund and trade payable. 12 lakh and 4 lakh, 16 lakh, 3 lakh and 2 lakh, 5 lakh. Now identify NATO. 11 plus 9, 20, 26, 32, 36, 36 minus 15, 21. And 850, 1250, 1550, 1850, 1950 minus 6, 6, 1350, 1350. Together it is 35, 3450. Okay. Now we have NATO with us. Net assets taken over of intelligent is 21. Net assets taken over of diligent is 1350. Now I'll compute how many debentures are to be given. 12% debentures are to be given to equity shareholders such that they'll get 10% return on their NATO. Let me start with writing NATO. How much is net assets of intelligent? 21. Net assets of diligent? 1350. So let me write 21 and 1350. On this, they should get 10% return. On the net assets, they should get 10% return. 10% is how much? 2 lakh 10,000, 13 lakh 50. Sorry, 1 lakh 35,000. So, if you are a shareholder, if you are 100% shareholder of Intelligent, your net assets is 21 lakh. After your company gets merged into my company called Genius Limited, every year you should get 2 lakh 10,000 as interest. To give that, I am giving you 12% debentures. How many debentures should I give so that you get 2,10,000 as interest? 2,10,000 is 12%. How much is 100%? I will take 2,10,000 and divide it by 12%. I am giving you 12% debentures so that you get 10% on net assets. Your net assets is 21 lakh. On the 10% is 2 lakh 10. So every year you should receive 2 lakh 10,000 as interest. That is by way of 12% debentures. So 2 lakh 10,000 is interest at 12%. How much is 100%? Nominal value of debentures. Take 2 lakh 10 and divide it by 12%. Take 1 lakh 35 and divide it by 12%. 17 lakh, and this is the debentures that is going to be issued. 17 lakh 50 and 11 lakh 25. 28 lakh 75,000. Done. So this is debentures that is supposed to be issued to equity shareholders. Now we have everything ready. Take the total. We have PC, NATO, identify goodwill, start with balance sheet. Balance sheet, it is merger. Assets, liabilities, everything will go face to face. Mutual indebtedness, one item will get adjusted. There is unrealized profit if I am not wrong. That will get adjusted. Share capital and reserves jagdali, this share capital will be new share capital as per PC. Got it? Okay. Help me with the total here. 14 plus 1750 plus 3 lakh 75. This working note, if you want, you can do. Nominal value per share, how much was it? That company. You can write here. This one, we didn't do this in detail. But if you want, you can do 3,000, 2,000. Their share capital is 3 lakh and 2 lakh. Nominal value is 100. So 3,000 and 2,000 shares. So we're giving 3,000 and 2,000 shares at 125 each. Okay. Take the total here. 14 lakh plus 1750 plus 3 lakh 75. Total PC to shareholders of Intelligent 3525. Diligent 8 lakh plus 11 lakh 25 plus 2 lakh 50. 21 lakh 75. Together total 57. I'll write there PC and NATO here to identify goodwill or capital reserve. PC is more, NATO is less. Genius Limited is paying more than the net assets taken over. So they're paying for the hidden asset called goodwill. 3525 minus 21 lakh. 14 lakh 25. And 2175 minus 13 lakh 50. 8 lakh 25. So this is the goodwill. You should keep this in mind. Now, Genius Limited's balance sheet is being asked. The books of Genius Limited, what should we prepare? Balance sheet. Is there an old balance sheet of Genius Limited? No. So journal entries we have not done yet. We have not been asked in this question. So using this entire NATO and PC, whatever is there, that will appear in balance sheet. NATO is assets and liabilities. Other than that, whatever is the difference is PC, equity shares, debentures, and preference shares. And difference is there, no? That will be goodwill, that will write. If you write this NATO, PC, and goodwill in the balance sheet is done. Shall I prepare balance sheet? Come on, straight away. Assets, land and building, PPE. Can I say these two items together will become my property, plant, and equipment? How much? 1950 plus 13 lakh. How much is 1950 plus 13 lakh? Shall I start marking them in a different color once they are posted? 1950 plus 13 lakh. 32 lakh. So let me write that in my property, plant, and equipment. How much is this? 32 lakh 50. 32 lakh. Everyone got it? If you want, I can prepare one notes to accounts for property, plant, and equipment. No, same thing, whatever we just wrote. 32 lakh 50. Land and building 1950. Plant and machinery 13 lakh. Together 32 lakh 50. Then come to the next item. In NATO, next item. Inventory 9 lakh. Inventory 9 lakh. I'll read as inventory 9 lakh. Shall I? Come to balance sheet. Asset side. Inventory. How much? 9 lakh. There is no need of notes to accounts. But if you would want, you can prepare notes to accounts, note number 8, and write the inventory like this. Inventory 9 lakh. There is no need. But still I wrote it. Okay. After that, come back to NATO. What do we have after that? Trade receivables. How much is trade receivables? Shall I post this? Trade receivables of 9 lakh. I'll post it to balance sheet straight. Trade receivables. There is adjustment. Mutual indebtedness. So I'll not read it in the balance sheet. We'll go to notes to accounts. We'll go to notes to accounts. How much should I deduct? 1 lakh. You can straight away write 8 lakh there. You can straight away write. But money. So trade receivables. How much is it? 9 lakh. I'll do mutual indebtedness 1 lakh minus and 8 lakh. The same 1 lakh should be deducted in trade payables also. Correct? Let me write here how much trade receivables? 8. Then come back to NATO. What is the next item in NATO? Cash. Is there any cash payment? No cash payment, nothing. So I'll write 5 lakh straight cash and cash equivalent. Shall I? Come to balance sheet. Cash and cash equivalent. I will write 5 lakh. If you want, you can prepare one notes to accounts. Not mandatory for this item again. So you can still write cash and cash equivalent 5 lakh. Not required. Still I just did. Again, Sumane. Done. Next item. After these many assets, liability side. Trade payable 16. Before I write trade payables, I should eliminate, 1 lakh. 16 lakh minus 1 lakh. How much do you think will go to balance sheet? In my balance sheet, I would write trade payables 15 lakh. How? 16 lakh it is minus 1 lakh mutual indebtedness. Observe. Trade payable 16 lakh is trade payable minus 1 lakh mutual indebtedness. 15 lakh will be the closing balance. Then come back to NATO once again. Come back to NATO once again. Last item. What is it? Retirement gratuity fund. I'll assume this to be long-term liability. I will write under long-term provisions. What is that amount? 5 lakh. If you want, you can prepare notes to accounts. But actually, this item again, I'm repeating. If there is more than one item, then you have to do only one item. There is no need to do notes to accounts. But I've written long-term provision, retirement gratuity fund 5 lakh. If you don't prepare notes to accounts, here next to long-term provision, here only you write gratuity fund and then write 5 lakh. Okay. If you don't write that, then you have to prepare notes. Then NATO, everything is over. Now we'll come to balance sheet. PC. What did we give? Equity shares. How much? 22 lakh equity shares of rupees 100 each. Shall I write it in notes to accounts? Shall I? Notes to account, share capital, there is authorized capital. The beginning of the question only, I made you read and then I made you underline. How many? 30,000 equity shares of rupees 100 each and 10,000 preference shares of rupees 100 each. So let me write equity share capital, 30,000 shares of rupees 100 each, 30 lakh. Preference shares, 10,000 preference shares of rupees 100 each, 10 lakh. That will not come to total anywhere. Okay. PC, what did we issue? PC we issued 22,000 equity shares of rupees 100 each and 10% preference shares of rupees 100 each. So I'll mark this in yellow, green, stating that this is posted. 22,000 and 5,000. Shall I write? Yeah, PC. Disclosure will do. Don't worry. Equity share capital. 22,000 shares of rupees 100 each. Entire 22,000 shares is issued in non-cash consideration only. Then 10% preference shares. 5,000 shares of rupees 100 each. Fully issued for non-cash consideration. 27 lakh. Are we done? Then one item is remaining in NATO. What is that item? 28 lakh 75,000. This 28 lakh 75,000 is 12% debentures. I'll write this 12% debentures 28 lakh 75,000 where? Long-term borrowings. In my long-term borrowings, I will write 28 lakh 75. If you want, I'll write note number 3 and write here long-term borrowings 28 lakh 75,000. EC over, NATO over. What is not taken over is reserves of that company. Did we take over their reserves? No, this is not. We are not taken over their reserves. But only one thing will come now. Why? What is it? Security premium. Where is security premium? When we issued equity shares are preference shares are, we issued it at premium 125. See, preference shares are issued at premium 3,000 plus 2,000, 5,000 preference shares. Nominal value 100. Issue price is 125. So please do 5,000 shares into 25. 1 lakh. Here this is 6 lakh 25,000. No. When we posted it to our notes to accounts, we wrote 5,000 into 100, 5 lakh. Observe. When I wrote here, I wrote 5,000 into 100. 5,000 into 25 will come here as security premium. 5,000 shares into 20. 5,000 preference shares into 25 per share. This premium. You know something? Balance sheet is over except for one last item, goodwill. NATO, PC, goodwill. That's what I told. No, NATO is over fully. PC is over. Last item, goodwill. How much is goodwill? 1425 and 8,25,000. Together, how much is it? 22 lakh 50. 22 lakh 50. I will write it as intangible asset. 22 lakh 50. Note number 7 if you want. 7 is the finishing move in this one for the flow that we went. But the answer is not over because of this item. Okay. Yeah, it is because of the efforts of all other items that we posted so far. And all that we need to do now is take the total and then put it to balance sheet. Shall we do it? Yeah. How much is share capital? See, we did not do journal entries. If we would have done journal entries, we would have not looked at PC, NATO and goodwill computation. We would have only looked at journal entries and then written it. That will become 20 marks question. If they ask with journal, they asked without journal. So we did PC, NATO computation and balance sheet. How much is share capital? 22 plus 5, 27 lakh. Let me write in balance sheet 27 lakh my share capital. And then reserves and surplus number 2. 1 lakh 25. I'll write reserves and surplus 1 lakh 25. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Everything's done. Take the total. 7 lakh, 77 lakh. And over here, 70. Here you go. The problem is finished off in style. And this is how you prepare an amalgamated balance sheet without doing journal entries.